Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thanks very much for listening to this video today, and as usual, don't forget to this video and subscribe to my channel. That will be really appreciated. All right, so sorry I haven't done a video over the last couple of weeks. Been a little bit busy and the markets have been pretty flat, to be honest, and not a hell of a lot has been happening. But today I wanted to do a video to give you a little bit more of an update on our portfolio and also explain a little bit about what's been happening in the markets recently and also some strategy. And I also want to introduce you to a new stock that I've recently put into our portfolio. So let me get started. So our portfolio actually last week was pretty good. It was up about 0.86%, which leaves us pretty flat for September so far. We did have a little bit of a nasty August, and that is because the stock market wasn't particularly buoyant in August. Volatility and volume was quite low, but also because Bitcoin and cryptocurrencies came down to the kind of support mark about 25,000 over the last kind of couple of weeks or so. And so our portfolio did pretty well last week, though, and that is mainly because Bitcoin and cryptocurrencies had a pretty good week. It helped prop up our portfolio, as well as some other key stocks in our portfolio that did well. So if we compare that against the benchmarks for last week, the Nasdaq was down about 0.4%. So it was a particularly more difficult week for technology stocks and growth stocks, and the S&P 500 was actually pretty flat, but it was down a very small 0.2% for the week. And Bitcoin, as I mentioned, had a good week and was up about 5.9%. S&P had a dip. Actually, Europe did actually pretty well last week, especially the UK. China was pretty flat overall for the week. And what we saw is we also did a short-term position in Nvidia, which I took, which was quite near the high so far for the year. Just a couple of, I think it was a week or 10 days ago, I took out that short position and I managed to close it at about nearly a 15% gain. So I was pretty happy with that so far. If we look at our portfolio on 2023 year-to-date basis, I think we're doing pretty well, to be honest. I think a lot of people may look at it like, obviously 2022 was a difficult year, and may think, okay, we haven't quite got up to those highs that we were in 2021, for example. However, our portfolio has risen pretty steadily this year. And it has slightly outperformed the S&P 500, which is up about 14.7%. Our portfolio is up about 15.25%. So nothing groundbreaking, but I think that it's pretty good progress, and we're starting to see that things could be very positive towards the end of the year, but also we could see big growth, which I'm expecting in 2024 and 2025 again, which I'll explain a little bit later. However, if we compare that to the Nasdaq, we are down against the Nasdaq. Nasdaq is up about 31.8%, and that is because a lot of the technology stocks have rallied pretty significantly this year, but it's been really dominated by those kind of top six heavily weighted stocks in the Nasdaq, which has brought the kind of majority of those gains. So it's a little bit of an illusion, really, against the rest of the economy, and especially how bad technology stocks did last year as well. So it's a bit of a rebound. We've also seen Bitcoin's done extremely well this year. That's been up 64.49% for the year. So it's been a pretty decent year for Bitcoin. So if we look at the main news for last week, as I said, the Nasdaq and the S&P had a slight dip last week. The technology and growth stocks did lag, and that was after the release of Apple's new product. which is the iPhone 15. It had pretty mixed reviews about the iPhone 15 from what I've seen. What I've heard is that it's a lot more kind of looking at the kind of green nature of making sustainable products and products that help, that aren't harmful for the environment, etc., rather than any major technological advancements in the handset. It's been mixed reviews, but I would say generally it was a pretty soft introduction. If we look at the headline CPI numbers, they showed the largest monthly increase since August 2022. So for the last two readings, we have seen that the CPI numbers have started to go up again. And that is mainly because energy prices have started to go up, and we've seen oil prices start to creep around over the $90 range and starting to creep up. And that is after we saw a significant reduction in oil prices at the beginning of the year. And that did help to lower the CPI numbers. And we did see regularly sustained lower CPI numbers for a very significant period of time. But that started to creep up again. So it started to be a little bit of a worry. And people are now starting to look at the Fed and say, look, what will they do? Will they hold the rates for longer? Or could they make some small increases in the rate hikes again before the end of the year? So it's something to keep an eye on. But we are actually seeing pretty decent in core CPI, which doesn't include energy. We're starting to see some reductions in that as well. So I guess a lot of it will be whether they can control, how well they control the oil prices and how high the demand is. We also seen retail sales for August were quite strong, better than expected, and that is demonstrating that consumers are continuing to spend money and that the markets are pretty buoyant actually. And I think a lot of people had expected a real big drop off in retail sales as interest rates are extremely high, affordability, cost of living crisis, etc. But they've actually held up pretty well. We also saw last week the ECB, so the European Central Bank, has raised interest rates for the 10th consecutive time, and it's now at a 4% interest rate, which is a record high. So they're continuing to increase them. As I've mentioned many times before, Europe is a little bit far behind in trying to reduce inflation in that battle against inflation. And although the inflation numbers are starting to come down slightly, they still have some way to go. And also they started raising those rates later than they did in the US. So I expect that to be more of a significant battle for longer, and they could raise those rates higher, whereas I expect the US is either very close or they have finished with their rate hikes, but they could leave them there for longer. We also seen the UK economy shrank faster than expected in July, and this is due to like worker strikes. There was a lot of wet weather in the UK, and those rising borrowing costs, mainly to do with an increase in interest rates. And what we saw is GDP has fallen 0.5 sequentially after rising by the same amount in June. So it's at a stage where, okay, the UK economy is starting to contract a little bit as people are having a lot less money. And what you're seeing a lot is people that were on fixed mortgages for 2 years or something like that. They are starting to come off, and now their mortgage costs are significantly increasing, leaving them less money to spend in their pockets. We also seen UK unemployment unexpectedly increased to 4.3 in the 3 months from July, up from 4.2 over the previous 3 months. So very small increase there, but starting to see a little bit of an uptick in UK unemployment, which means that some of the businesses could suffer. Also, what if we turn our attention now to China? What we've seen from official data coming from China in August is that they provided some evidence of economic stabilization in the country. And we've seen that from industrial production and retail sales, which have grown more than that had been forecasted the last month from a year earlier. And unemployment has actually unexpectedly fell from July. So there was a lot of narrative over the last couple of months that the rebound in the Chinese economy hasn't been as strong as possible, and as was expected after the COVID and them opening up regulations and restrictions on COVID-19. However, we are starting to see some slightly better than expected numbers coming out from data. Okay, it's not extremely promising data, but it is a lot better than expected. And we are seeing a lot of depressed prices and depressed valuations in the Chinese stock market, and it might not be as bad as it first appeared. We also seen inflation data revealed that consumer prices have returned to growth after slipping into contraction in July. The consumer price index rose 0.1% in August, and that is from a July's 0.3% decline. So it was started to be quite worrying that the Chinese economy was going to decline, and actually we're seeing the opposite of inflation. And actually started to see a little bit more of inflation in the previous few months. But what we are actually seeing is that the Chinese government have put in a lot of kind of incentives and a lot of ways of bolstering the economy. And what they've done is they've been, quite generous in setting interest rates. They've done a lot of different schemes for the ailing property market and to get people to really stimulate the economy. So another thing that they did last week as well is the People's Bank of China has cut its reserve ratio requirement by another 25 basis points. And this is really to provide more liquidity into the financial system. We've seen this trick many times from China over the last year or so, and it just helps to stimulate that economy and try to drive more liquidity. Okay, so a new stock that I've added to our portfolio is Warner Brothers Discovery. And I just wanted to explain a couple of reasons why I've added Warner Brothers Discovery into our portfolio. So I'm not going to go into this in too much depth because it would take me a long time to really explain the inside out of this business to you, much longer than you'd probably be willing to listen to. But what we need to know is that Warner Brothers had a merger last year with Discovery, which closed last April. And what Warner Brothers did is actually they took on a lot of debt in order to make the merger become reality. And what they've actually managed to do is they've managed to actually manage that debt pretty well, and they've reduced that debt to approximately 45.4 billion, and its net debt to 42.4 billion. So it's actually reduced its debt by 10.9 billion since that merger closed last April. So they are starting to pay it down, and that was one of the key reasons, the amount of debt, why the stock price was suppressed so much. Also, I really wanted to put this portfolio into our portfolio because I think that it's very well valued against its peers, against Disney, etc. But what you need to know is that this type of business is a very capital intensive business. They always have to innovate, especially in its streaming division. And what they need to do is they need to pay a lot of money for the kind of infrastructure around the streaming and making sure that they have the right titles and the making the right movies, and they're providing the right variety to its customers. And we're seeing really an accelerating revenue stream for its streaming verticals, and it's probably what I'm most excited about. We're also seeing success of Warner Brothers recently, from the success of the Barbie movie. Whatever many people think about that movie, and I'm sure there'll be a lot of people who go, oh, what a crap movie. It did undoubtedly bring quite a lot of box office views, and lots of people were very interested in it was really a blockbuster. So that kind of bodes pretty well for Warner Brothers. And also there were concerns over the Hollywood strike that's been happening, and that it could potentially derail the ability to make movies over the longer term. But I think that is really just a good opportunity to get in at what is quite a depressed price, and which I think has a lot of upside potential on it. And things that are short-term in nature, like strikes, etc., they won't last forever, however long people think that they might last, etc. And I think that sometimes you have to take these good opportunities when prices are depressed, in order to take the best asymmetric risk and have the most upside. So as we move on to our top 3 performing stocks for last week, and our top performing stock for last week was Sinclair Broadcasting, and that was up about 11.03%. That's had a pretty tough few months, but we're starting to see some rays of light at the end of the tunnel, and that started to perform slightly better. And the second best performing stock for last week was Wynn Macau, and that was up about 5.45%. So that has been performing a lot better recently. And the third best performing stock for last week was that stock that I just brought up and have just recently added to our portfolio, which was Warner Brothers Discovery, and that was up about 4.59%. So took that position probably about 2 weeks ago. So our portfolio is now, for Warner Brothers, is showing a positive trend. Okay, so as I move on to our Death by Charts edition, I'm just going to go over 4 key charts for you. So the first chart to the left is the US inflation rate, and that is since 1990. And what we have actually seen is, as you will know, we saw that kind of big increase in the US inflation rate going into in 2022, and we saw a big drop off in the US inflation rate as they continue to increase the interest rates, and we also saw the oil prices come down, etc. However, that has, over the last couple of months, has started to increase again, and again that's mostly because of oil prices. So the overall US inflation rate has moved up to 3% in August, and that is the second increase in as many months. And there was obviously a lot of fears about allaying some of those fears in the continued positive trend in core inflation, which moved down to 4.4% in August. So I think it's a case really where we're starting to see a drop off in some of those sticky areas which were causing a lot of difficulty to reduce the CPI. Shelter is one of them, but it obviously had a very lagging effect, and we're now starting to see some of the improvements in that. However, we are seeing that spike again in oil, which has caused some of that increase. So if we look at the year-on-year change of different aspects of the CPI reading, the spike in energy prices, fuel prices have gone up about 9.1% in August, and we've seen gasoline increase by about 10.6%. So that does have a very significant effect on inflation. We've also seen energy has been a major tailwind in recent months, and that has helped push overall CPI down to 3% in June, but the year-on-year change was markedly less negative in August. Okay, what I just want to show you on this third chart is the US rents versus US shelter CPI year-on-year change. And what we've seen is shelter continue to be the major driver. Shelter CPI inflation has declined for the 5th straight month in August, moving down to 7.3% year on year. And now we've actually seen, for the first time, we've seen actual rents now down 1% over the last year. We could see a continued move lower in the lagging shelter CPI for the remainder of the year. This should in turn help push down core inflation. So for the first time, we are starting to see rents come down slightly, and we're seeing the shelter CPI reduce. This took a very long time to move its way into the economy. You've got to think that a lot of people are on these kind of fixed mortgages. Many people weren't moving, etc. So it took a long while to this kind of to filter through into the cost of apartments, the cost of houses, etc. And now we're starting to see a decline. I expect this to continue, especially over the next kind of couple of months. So it will really, I think the future CPI numbers will really depend on whether the oil prices come under control and come to a reasonable level. If they do come to a reasonable level, I can see a drop off in CPI because of these other areas such as food and shelter, etc., which are coming down. The last chart to the right I wanted to mention is the direction of energy prices will be a very key factor in the near term. Crude oil continues to march higher. It's over $90 a barrel at the moment, and gasoline prices are now above year-ago levels. So it's going to be very critical to see how those oil prices are over the next couple of months and how they affect the CPI readings. Okay, so over to crypto, and I want to give you my news and views on crypto over the last couple of weeks. And basically, Bitcoin hit a very kind of sticky period a couple of weeks ago. And that is because there was a lot of enthusiasm around the Bitcoin ETF with BlackRock, Fidelity, etc., who had launched applications for Bitcoin spot ETFs. And there's a lot of excitement that those could be approved sometime within 2023. I think, in my personal opinion, I think they're more likely to be approved kind of early 2024, just before the halving, towards this kind of final ETF decision dates from the SEC. However, there was a lot of optimism. And I think as we started to see the first round of delays from the SEC, I think the key and the main sentiment is that they will be approved. But I think the reality of when those might be approved has caused a little bit of a dampener in the overall sentiment in the next kind of month or two. But we do have that halving, which is expected in kind of April 2024, May 2024. So those Bitcoin ETF approvals could very much fall into line with the Bitcoin halving in 2024, and we could see some explosive moves. So Bitcoin went down to that kind of 25,000 level, which has acted as support over the last couple of months. And however, we have started to see a bounce back over the last week or two in Bitcoin. And a lot of that is speculated around Mt. Gox. So for a lot of you that don't know, Mt. Gox is an exchange that was very popular in Bitcoin circles in the first kind of 3 to 4 years of Bitcoin's existence. It was the major exchange to buy Bitcoin on back in kind of 2011, 2012, 2013 time. And I think in 2014, that is when Mt. Gox went under, and they had a lot of hackings, and they didn't have the funds that people had in their accounts, etc. And what they did was basically went through bankruptcy in Japan, and there's been a long case over the last, I don't know, 6 or 7 years now, where they've been trying to get those funds back to customers, etc. And it was expected, basically, to cut a long story short, that a lot of those Mt. Gox coins that they still had available were going to start to be dispensed and given back to some customers at the end of 2023. But now it's likely, and that there's a lot of rumors and speculation around that has been delayed now to at least 2024. So hopefully, when those Bitcoin do start to get sold off, etc., it will fall into a period where there's a lot of demand for Bitcoin. Maybe those ETFs will be approved, the halving would have happened, price would be higher, volume would be higher, and the market could absorb those Bitcoin a lot better. Other piece of news I just wanted to bring up as well was around Binance. There's been a lot of discussions, lawsuits, etc., with the SEC about the Binance entity, and the SEC are actually claiming that Binance have not been totally transparent, have not been providing the information that they require for the lawsuit, etc., and to be able to investigate their business. And what Binance have actually said is that they are really bombarding them with requests for information, and information that they can't provide in the amount of time, and information that they don't necessarily need, etc. So the court has actually come back over the last week or so and have actually said that the SEC need to be much more specific. They can't just look under the skirt at everything. They need to be very specific in what they need. And another major point is that Binance US is actually very small compared with the Binance international business. And the SEC don't have any jurisdiction to look at the wider Binance international business as well. So I do think that there's a lot of FUD out there about Binance, but I don't expect that the SEC are going to be very successful, especially with what's been going on in the courts, etc., with the SEC, with crypto companies over the last few months or so. I don't think they're going to be very successful in this case because, basically what's been going on in the crypto markets, and Binance have got a lot of money to fight the SEC, etc. And again, it's a very small part of their business. And the third piece of news that I just wanted to talk about, and this actually happened a couple of weeks ago, but I don't think I've made a video since then, and that is that Franklin Templeton, which is another large investment firm, has actually filed for a Bitcoin spot ETF application. So that adds them to the ranks of Fidelity, BlackRock, ARK Invest, etc. Franklin Templeton is one of the largest asset managers in the US. I think it's probably the fourth or fifth. I would need to check that up, but I think it's the fourth or fifth largest investment company. So again, more big names filing for Bitcoin spot ETFs, and from the traditional kind of money management firms. So you have to think that there's a very high likelihood of these being approved. Otherwise, these large firms wouldn't be applying for them. Anyway, thank you very much for listening to my video today. If you haven't already, please make sure that you join my Discord group. We always have really great conversations on a daily basis about what's happening in the markets every day. You get to hang out and talk with a lot of other investors who are in the same boat as you. And you're also able to ask me any questions at any time if you have them. So until then, have a great week ahead.